Hi, and welcome to Two CPAs The Mic, the podcast where we talk tax, finance, and all things related to business. Whether you're a business owner, working professional, or someone who wants to start a career in accounting, this is the podcast for you. Hosted by CCK Strategies partners Jeff Frable and Sara, we dive into relevant business and tax matters with working professionals to make these topics less intimidating, relatable, and dare we say fun? Let's get down to business.
Welcome to another episode of Two CPAs and the Mic. I am Jeff Frable with CCK Strategies. We are here today to cover relevant business, tax, and accounting topics, but doing it in a way where we're going to apply straight talk, some unexpected humor, but practical information without all the jargon and stuffiness that usually goes with our profession as CPAs. Again, I am Jeff Frable. I've been a partner at CCK Strategies for 20 years, and I'm here with my trusty co-host, Sara.
Trusty.
What's up, Mays?
Hey, Frable.
You know, we've been recording today, and I haven't had the opportunity to tell you that I am in 80s heaven today.
Oh,
because
okay.
I went to see Back to the Future, the musical last night.
That's right.
And I know you had seen it.
I saw it Tuesday.
And it was amazing.
Wasn't the end phenomenal?
The end was phenomenal. The way that they brought the car on stage, the DeLorean.
Hey, what if we're listeners?
Well, how are you going to watch this play and not know there's a DeLorean?
What if you don't want them to know that?
Well, it's Back to the Future. You got to have a DeLorean.
Fair.
So they bring this car on, but you can't drive a car on stage. So it's what they do with it on the stage that's amazing.
Yes.
And at the very end, they do hover the car, which is pretty cool. So it was.
Did you go sit in the car
I didn't go sit in the car.
What'd you wear?
What did I wear? Okay.
Yes.
So I did a faux pas. I crossed my Marty McFlys, but I wore jeans. I wore a white shirt, and then I wore a jean jacket. But it was, I forget what's the phrase we used back in the 80s. It was
Acid wash?
Acid wash.
Okay.
Gray.
Okay.
And then I wore a gray puffy vest over that.
It's supposed to be red.
It's supposed to be orange.
No.
For like a life preserver.
Yeah, the life preserver.
But it's
it was
red?
color
Is it red?
coordinated. But the reason I crossed my Marty McFlys is because I have a Back to the Future 2 Marty McFly hat for like his son wore.
Yes.
So I wore that. Now, my wife didn't want to be seen with me.
Sure.
Walking across to our seats, this guy goes, "That's a really cool hat." I said, "Tell my wife that." But it was really warm as I sat there the entire evening. And how many people go to those plays, Sara? 1,500?
Yeah.
Yeah. Okay. I was the only Marty McFly in the audience. So anyway,
great.
but I am in 80s heaven this morning. But
awesome.
But people aren't listening to our podcast to hear about 80s heaven and Marty McFly.
They might be.
They want,
good.
They want relevant information, don't they? And we have a plethora of relevant information today. We are going to be talking about the
three amigos in there.
The three. Okay, we're just going to do an 80s episode. We are talking about the who's, the what's, the whys, and the hows of what today, Sara? Entity selection.
I could not think of the word. Like I was like,
80s.
it blanked. Yes.
80s.
I was still thinking
that might be called a brain fart, but that's okay. We're talking about entity selection today.
Yes.
We're going to be talking real language, high level, but we have this disclaimer for this episode, don't we?
We have a disclaimer, yes. It is at the end of every single one of our episodes, but we are going to be talking about things pretty in depth, but everybody's situation is different. You are your own person, your own individual, your own business. Please, 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 please talk to a professional, a trusted professional before you make any big decisions.
Yeah, I wrote down in my notes, don't try this at home. I was thinking about David Blaine, is that his name? The magician. Illusionist guy.
Yes.
And they do these things. They say, don't try this at home.
Sara, I thought that was on Jackass. They say, don't try this at home.
I don't watch Jackass. That'd be more of a 90s thing. So anyway,
That's 2000, but okay.
Okay. Anyway, the thing about this is how many clients do you deal with that come in and say, I got an LLC, and you're like, well, why did you do that? And they're like, I don't know.
I mean, 1 out of every 2.
Yeah, it happens all the time. So please listen to our disclaimer. Sara is right on. You need a trusted team of advisors to work through this. We will be talking about concepts and issues, not strategy and recommendations. Right. So everybody that's listening needs to raise their right hand and say, I promise I will not go wherever and say the people on the podcast told me to do this, because that's not what we're doing.
We just want to give you enough information to know, help raise the question,
right?
Not just make a rash decision.
And the truth of the matter is, this is a very relevant topic for us. We live this every day. We could really geek out on it a little bit.
I'm so excited because I think we are going to a little bit.
I can't wait for this.
Which is why we have not introduced who's on the mic today.
Yes.
It is Christy Porter. I mean,
hello.
We all know and love Christy from all of our previous episodes, and we know that she is our in-house producer. She purposely does not know about what we're talking about for one reason and one reason only, and that is to keep us relevant with our audience.
Yes, and ask questions if we're not explaining something.
You know, I'm just going to tell you from the beginning, you guys have already nailed it. So many times when a business owner or a person, they don't even know what questions to ask. So if the takeaway is, we're going to plant some seeds and help you guys understand what questions to ask your trusted advisor, that's kind of a mic drop moment. There you go.
Absolutely.
Enough said. So I'm super excited. Let's do this.
So Sara, who you didn't introduce yourself. You do every episode.
I do. Right. I'm Sara Mays, a partner here at CCK, and just living life and living it here because we're talking about this.
Talking about entity selection.
Yes, and we talk about this all the time. So it's where I geek out.
And I think the other thing that we need to point out is that any one of these issues, again, we are not going to get into the details of what this is and what that is. We're going to keep it pretty high level. But any one of these topics could be a whole 4 to 8 hour education class.
Yes.
And so we're not going to get into that anywhere near that detail. But so who are we really, in your mind, Sara, who are we really talking to today?
True entrepreneurs. Absolutely. Like somebody who really wants to go out there and start maybe not just one business, but multiple businesses, or going into different investments, and what that looks like from can I mush all my stuff together or should I keep it separate?
Right.
Those kinds of things.
So it's not only a new business, but it's also those entrepreneurs that have been operating for a while, and they either don't know why they have the structure they do, or maybe questioning, maybe I need to change, because these things change often, and when they do, there could be tax implications.
Right. I mean, it could be tax laws that change. It could be just a change in their business, period.
Absolutely. So to start this amazingly exciting discussion, start off. Identity structure. Stay with us. It'll be fun. Let's get on the same page.
Okay.
So when we talk about entities, take us from where, I'm not going to say the bottom, but start from the basic to a little bit more advanced. What are we talking about?
Okay. There's pretty much 3, again, I'm just going to start with the disclaimer, but pretty much there is just 3 types. There's a sole proprietor or sole prop. There is corporations or C Corps, and then there's partnerships / LLCs. LLC is a limited liability company.
Right. And these, we will get into it a little towards the very end, but we could have all sorts of combos. It's kind of like going to Quick Trip and seeing your Coke and your Mountain Dew, and,
you're making a drink suicide. Yes.
Make a suicide out of it. Exactly right. So, we're talking about sole proprietorships, corporations, partnerships. Let's just keep it there, and then we'll just kind of rotate and talk through them. And so let's start from the very beginning, and let's say I'm a entrepreneur and I know I need an entity. What is the way these things get set up?
Well,
generally speaking,
well, I'm going to even back up a little bit, because I think when people want to start a business, they may not even think they need a structure. they can just start. And that's what's a sole proprietor, is when you just kind of start and you're just working and doing your business, doing your thing, and you don't have anything established, and you just run with it. I think the next step from that is most people do start limited liability companies. And a limited liability company, depending on what state you're in, can be relatively easy to set up. But you need to understand that with limited liability companies, that you have created a legal entity, right?
Yeah.
So there's some legality things that you can't just go to a Secretary of State website, and that's how you set up legally with the state. You have to set up an entity, and you can't, it's not just the step of clicking a button and paying your fee.
50, yeah, right, exactly.
Yeah, to create your entity. You also need to have some legal coverage with that, and creating an operating agreement or some kind of partnership agreement to know that you're operating legally.
I think we may have slightly jumped the gun a little bit.
I know I did.
No, I may have, because I was looking at my notes for where this part was and I couldn't find it. But with the clients we talk to, there's different times that entities are needed. So let's just say I'm doing crafts at the local craft store and I'm just kind of bebopping along. I may not need an entity. What are some of those times that you see with your clients where the entity structure starts to really come into play? Is it feel? Is it a revenue number? What are the different kind of situations where we go, hey, we need an entity?
Right. I mean, it is different for everybody, but I mean, because we'll even get into, if you're just doing some crafts or anything like that, that could be, the IRS can construe that as a hobby. And really is this your means? Is this your true, I'm going to use an IRS terminology here, trade or business? Are you really in this to make money and to live? And that's probably where I think the feeling cusp is, am I doing this to live and to support yourself or your family?
What about legal protection? Does everybody need legal protection? We're not attorneys. Disclaimer, big time here. But.
Again, that I really do think that is a feel, and really where you're getting into. If you're getting in really talking to other people and providing advice or providing a product, I think that's when one of the triggers to have legal protection.
Yeah, because sometimes there certainly are tax benefits to having entities set up, but a lot of times it could be, I just need more protection because of the stuff that I'm doing. And so when you were talking about, and again, we've been joking about it, but it really is serious. We're not attorneys. When we start talking about these entities and these structures, where do you start to get some of that legal protection? Does a sole prop have any legal protection?
A sole prop at the face, at the name, it does not have legal protection. Right. It's just you. It's a sole proprietor is sole, SOLE means it's just you. And so, there's no protection against you. There's no structure. There's nothing in place to help put I don't want to say barrier, but there's something another step before it comes directly.
I call it a roadblock or a speed bump. A speed bump.
Yeah.
And you're right. Even entities, people can pierce that, and that's why you need a good attorney on your side. But the entity, whether it's a corp or an LLC, does provide some kind of speed bump there. Yeah,
it does put almost a veil between you and your entity.
Right. So when you hear of the corporate veil, that's kind of what you're referring to.
It's not a block.
Right.
But because you can still pierce it, but it's see-through, but there's something there before it comes directly.
I have a question.
Yeah, go ahead, Christy.
Because I'm listening and I'm thinking of all the people I know and even me. I have my job. And then I want to make some passive income. And so my girlfriends and I go out and we start something, and I'm making a little bit of money. Well, one of my girlfriend's brother says we don't need anything. Another one says their brother or sister-in-law says you need to protect your home. You need this, you need that. And so I'm listening to all of this. Again, where do I even go to ask these friendly questions of, do I have to be making do I have to be making this kind of money to be doing it? Or do I need to be protecting my home while I'm doing this? Because I want to do well in my side gig, But then again, I don't want to incur attorney expenses. Am I even asking the right questions? These are those questions that this sort of entrepreneur might be thinking.
I think if you're starting to ask those questions yourself, then they really need to be answered by a team of trusted advisors. The thing that you brought up that I think is very interesting and is an extremely beneficial segue here is we've talked about the legal protection, but another reason why you may want to consider an entity is if you have business partners.
Right. Yes. Yes. Because you were talking about a group of girlfriends.
Yeah.
Yeah. I think that I really do think you may not think that you're going to make any money, but if you're going to be working with somebody, I mean, and I'm not just going to say friends, I'm saying sister, mom or dad, that is absolutely when you need a formal legal entity to work in.
Right.
Because
it just complicates things exponentially when it's not just you. So
we've seen it.
Yeah, and we see it all the time. And so we talk about the legal protection. We talk about the business partners. There's also the kind of the threshold of income. And you were kind of referring to that before, Sara, where you may not need that entity, especially if your legal exposure is not really significant if you're on your own. But the more net you start making, the more there is potentially the need for the entity because of
tax strategies.
The tax strategies.
Yeah.
So, and then the other thing too is if you are an established entrepreneurial business owner and you start maybe a different, not necessarily a revenue stream, but some other sort of line of business, there may be reasons why you may already have a LLC set for your operating business, but there may be a reason why you want to separate that out and segregate out that new line of business and into something different. So again, it's the legal protection, the business partners, the income level, the lines of revenue. These are all reasons why.
Does a bank account fall into some of the complexities? Because I've heard others say, if I'm going to hire someone to do my books, I need to have a separate bank account.
That is a really good question. I tell people all the time, separate your stuff out. And that really is more from a IRS audit protection, or I shouldn't say protection, but more safeguard, as far as it's easy to, if you keep your business separate in a business activity separate in a bank account or credit card, the IRS, it makes it easy for them in case of an audit, knock on wood, that it's easy for them to just keep their focus on your business. If you commingle that stuff, then you're opening the gamut for the IRS to look at more than what you probably want them to.
And I think when I go in, if I were to open a bank account for my business, I'm going to have to provide documentation for an entity structure. Is that right? Unless it's a sole proprietor?
Right, yeah. So you can open up a separate business account. Now, I'm not saying I'm a banker either, so I got to put that disclaimer out there. Yeah. But you can open up a separate business account as a sole proprietor, but you do need other items if you're going to open up a true bank account.
Yeah, and I think that's a really great segue because now we're back to where we were
with legals,
with legal setup is Sara was right. These things can be set up with the state. That's generally how they're done. There's a difference between the setup and the taxation, I guess is what I would say. In other words, it's a state entity. It's not a federal entity, but the feds are where it gets taxed potentially. So the setup is done state by state. You can do it online generally, and then what is referred to as an identification number from the IRS. So Christie Porter LLC then gets an identification number
is that a tax ID?
Yeah, it's a tax ID. Okay. It's not your Social Security. It's something different.
Something different from your federal identification number.
Right. So, and you get that through the IRS website. But it all goes back to your question, Christie, that when you want to set up Christie Porter LLC at the bank is generally going to require some sort of certificate of LLC, the identification number, maybe even the operating agreement. They're going to want those kind of documents. Sole proprietorship, not so much. But when you have something that's more established, they're going to want to have those things. So and that's usually where the legal counsel comes into play. And like I said, you can do it yourself, but usually it's better to go through the attorneys, through legal counsel to do that. But because the other thing that's part of all this, and this goes back to what you were saying before, Sarah, is that it's a legal thing.
It is. Mm-hmm.
And those legal things, I know I'm using really technical terms here.
Yes.
But those legal things have documents that need to go with them and need to govern your entity. So if it's a corporation, it's usually the bylaws, stock certificates. If it's an operating agreement, if it's a partnership or an LLC, you have these operating agreements. So they're extremely important to have. And that's why, again, we talk to people all the time that come in and say, I have an LLC. And you're like, well, do you have an operating agreement? Do you have this? And they're like, no. And I just set it up.
Right.
And they have no idea how to operate. And so that's where we come into play.
Now,
Another question.
yes.
Yeah, go, Kristen.
You're throwing some words around LLC, and when I hear corporation. So if I have a corporation, do I need a board?
Yes, you do. You have to have a board and all those. I'm again not going to getting into all to the legal stuff. An attorney absolutely can advise you what exactly you need in all of those if for a corporation. But yes, it is. A corporation is definitely more intricate and has more
formalities.
Formalities, and you have to check
It's
things off
helpful
of them.
without giving legal or professional advice. It is just by understanding
The differences.
Yeah, LLC, corporation.
Well, I'm really concerned because you ask a question like that, and we kind of want to geek out even more because
I'm reining it in.
we're reining, because there are these. You get into the situation where when you talk about the formalities, the corporations have been around forever. And so there's a lot of precedents, and there's these formalities of the board minutes and because if you get audited by the IRS and you're a corporation, the first thing they're going to ask you for is those board meeting minutes. But they're not required for an LLC. Now, are they good practice? Yeah, it's a very good practice to have those, but they're not required. The LLC came along much later, and so there's not as much precedence. And so, again, we kind of want to geek out on some of these things, but they all have their issues. They all have their requirements. They all have their formalities.
LLCs, you have to have a managing partner or
Yes.
something like that.
That's right.
You have partners.
You have partners.
Okay.
But let me stress this. You can have a limited liability company and you can be a single member limited liability company. But as soon as you add that partner in, then that's when you need a managing partner, the managing person in that.
Which is another great segue because what you get into, and we talked about it a few minutes ago, you have this. When you start generating income, I mean, that just kind of throws this whole thing on steroids, and what you do and what's the best way to go about doing it, because they all have different tax ramifications.
Yep.
And that's where the strategy really comes into play. So and I'm just going to try and keep this extremely high level and simple. Let's go back to our example of Christie Porter LLC. And Christie Porter LLC is a service provider. You're providing service and consulting related to Clifton Strengths, let's say. Okay. There's a big
Stealing my ideas.
Yeah, I know. There's a big difference between you generating $10,000 a year doing that versus $100,000 a year. And when you get into what Sarah's referring to as a single member LLC, the single member LLC defaults to reporting on a Schedule C, which is on your 1040. And not saying that's a red flag for audits, but when you break down audits that take place, they see the Schedule C, they're going to go, oh, it's like a shark to blood. They go there. They want to see, because a lot of people report hobbies there. And so
generating losses.
And so it just is, it's one of those things where it's like, is there a way that I can have this almost this cake and eat it too, where I can get it off of my 1040 so I eliminate some of that audit risk, but then get some tax benefit?
Because if I have a Schedule C and I invest more than I made, I have a loss. And that's beneficial to me as an individual.
Well, you say invest. When you say invest, it depends on how you put you're spending your money in your investment. So if you're spending your money to create losses and to have expenses that you're paying out, they need to be deductible, tax deductible type of expenses. And yes, so if you're investing into your business and those are and you're paying for expenses that are generating losses, the IRS could come at you, and I'm going to emphasize could come at you and say, no, and really try and disprove the deductibility of those.
So I need to keep really good records.
Oh, absolutely.
I need to keep really good records. So I shouldn't be afraid of an audit. And I can say, here it is. Look at it.
Here it is.
Okay.
But
yes.
The other thing about that, Christy, we could have a whole episode on IRS. And actually, it's on our list to do because we have an internal expert on that. But I loved how you said a loss is good for me. The IRS doesn't see that the same way.
Okay.
They are like, oh, you must not be really operating as a trade or business if you're losing money. And so that, again, that gives them an opportunity to go in and look and say, oh, this really isn't deductible. I mean, I could tell stories. We could all tell stories about what is true and reasonable. And the IRS looks at it and goes, oh, no, it's not, just because they're geared a certain way. But
because tax deductions equal less tax getting paid into the federal government or the state government. So,
absolutely. So again, income plays a big role in this selection process, but it also, the way you report it plays a role, because we would probably want to get you away, because let's say you have a lot of income.
Yeah.
Gross income and net income in your sole proprietorship.
Oh, wait. What's the difference between gross and net income?
Well, go ahead, Miss Mays. Why don't you?
Okay, gross income is the revenue that you're bringing in and that you actually collect from your customers, either if you're selling a product or you're providing service. Net income is the taxable income after your deductible expenses. So you're taking your gross income and you're able to deduct expenses such as payroll and repairs and insurance, all of those kinds of deductions that the IRS truly does say that these are true deductible expenses to run your business, to get to a net income. And that net income number is the number that everybody always looks at, because that's usually the amount that gets taxed.
Right. And the thing about it is that with that Schedule C, even if you have a high gross income and high net income, well, we'll get into this in a minute, but the high net income on that, reporting that manner actually could cause you tax that you could alleviate other ways. But again, it draws this attention, and you just never want the IRS looking at that kind of stuff.
And that's why I would surround myself with professionals.
Yes, absolutely.
So the accidental entrepreneur, someone who just gets involved in something with their friends and they start generating income, revenue, gross, net.
Yeah.
And I'm looking around going, whoa. So it's really about who you surround yourself with, not just your friends, but the professionals who can guide and direct and answer all these very simple questions.
Well, the point of that is that the entrepreneurial business owner needs to do what the entrepreneurial business owner is gifted at doing. Our role is to have a relationship with that individual and take these concerns and issues off their plate, provide good information, good options so that they can go and do what they're gifted at. Because a lot of entrepreneurial business owners, they're just not gifted at this. This is our gift. This is what we do. This is where we provide value. And so really what we want to do is alleviate those concerns for those individuals so they can go make money is really what it all boils down to. So again, the income level has a huge issue on this reporting. But it's not a make all break all on which entity type. Absolutely not. Let's jump back, Sarah, and talk a little bit, now that we've talked about sole props a little bit, talk a little bit about the difference between these entity types as it relates to pass-through and a taxed entity.
Ooh.
I know, without geeking
out. So sole proprietor is, Jeff already mentioned, it is reported on a Schedule C. A Schedule C is an additional form that you file with your personal tax return, the Form 1040. That's probably what most of us know the best is Form 1040. Then we've got, if you have a LLC and you're a single member LLC, well, guess what? That's still taxed and reported on your Schedule C, on your 1040. But then if you start adding partners into the mix, then if you have created a limited liability company, well, you've just created a partnership, taxed as a partnership. And that is reported on Form 1065. And a Form 1065 is not necessarily a taxed entity. It is a pass-through entity, which means all of your activity, all of your income, all of your expenses, that is reported on that Form 1065. Sorry, let me back up. It is a Form 1065. It's all reported there. And they generate what's called a K1, a Schedule K1. And that is a separation of how all of the activity in that one LLC is split between the partners. It doesn't have to be 50-50. One person owns 50%, another person owns 50%. It could be 90-10. It could be 99-1%. It is just a breakdown of how that activity is going to be split and taxed to another person. So going back to Christy Porter LLC, say you and Jeff have owned this LLC together.
90-10.
Okay. Or 99-1 really, because you're really the brains behind the whole thing.
It's 50-50.
Yeah.
It's 50-50.
Yes. And so everything, 100% of the income in Christy Porter LLC, 99% of that goes to you, 1% goes to Jeff. Then you're going to take your Schedule K1 and you're going to go and report that over on your Form 1040. And that is how the IRS and the state agencies collect their tax. So we're going to take that 99% of the income, report it on your personal 1040, and then from there you are taxed that way.
So let me jump in here, and I'm going to take over right now and take over Christy's role of asking questions and ask my own. If I'm listening, I'm going, well, it sounds like it's the same thing like the Schedule C that we were talking about before. How's it any different?
How is that any different? It is so different because you are taking a Schedule C as one person, and with a 1065, you're bringing in multiple people. I mean, as little as 2 or up to. But
the key is that it's a separate form.
It is a separate form.
Yeah, and that's a big deal. We've been talking about the Schedule C and how all that information is on your personal tax return. This takes all that information off.
That's right.
And it puts it on a different form. It reports it similarly, but it's all in a different form. And the only thing that hits your tax return is one number. Several numbers sometimes, right. but just the net.
The net number
that's attributable to you. And so all that detail is gone from your personal tax return.
Is that why it is a flow through or a pass through entity?
That
because
is exactly
it passes down into this individual return from the K1 form.
That's correct.
Yes, that's right.
And if we want to get technical about audit considerations, 1040s are generally a little more subject to audit than the partnerships and the S corps. And we haven't mentioned S corps yet, but let's just call it corps. And so that's another reason why we would like to kind of get all that detail information away from the 1040.
So this whole premise of entity structure, this is a lot of the why behind these decisions that business owners make.
Well, let's take that one step further and talk about the decisions that business owners take when it comes to entity structure. We haven't really touched on it, but we were joking about 99-1.
Yep.
And we won't get into a whole lot of detail, but one of the main differences between corporations and partnerships is corporations, again, more formalities, more structure. Partnerships are a little bit more flowy, real technical term.
Flow through.
So if I own 10% of a corp that we are owned together, I have a lot more minority rights than you may really want me to have. If we move over into a partnership, that's governed by this operating agreement. And operating agreements can be written a plethora of different ways.
Right.
And so you could say in this operating agreement, well, you're going to get 10% of the income allocation, but you know what? You can't have access to this, or you can't have any voting control. You can have a lot more control over what you can do to me as a minority partner than you can as a minority shareholder. So this is where we come into play, again, from a relationship perspective, along with the legal team, because we want to be sitting at the same table with the legal team, because not everything that's great from a tax perspective is good from a legal perspective, and vice versa.
That's right.
So we want to all be in the same boat at the same time, having that discussion versus saying to the client, well, go tell your attorney this, and then trying to interpret it.
Right. And I mean, and I'll say this too, there's even some changes that you can make on the back end, because we've seen many times where a client will come in and have I've already done X, Y, and Z to set up my LLC. Here's my operating agreement. And then we'll go in on the back end and go through and read and say, okay, do you understand from a tax perspective, A, B, and C happens? And they're like, oh man, that's not even my intent at all.
Great point.
You can absolutely amend those operating agreements.
Well, let's take it one step further. Let's say you're starting, and again, this is we talked about before, where changes happen in business. And let's say you started off and you just started generating a little bit of net income, and it grew and it grew, and the whole business grew. And now you're thinking sale. Well, there's not only there's tax differences as it relates to your exit strategy with a corp versus a partnership. And that all goes back to the concept of tax ramifications. And so it's you may not know day one what you want, but a lot of people kind of do. And they go, well, I think this is my idea. This is how I'm going to grow it. And this is what I'm going to do 5 years down the road. Well, if we can plan now for the way we want it to be at the end, that's the best way to do it versus then trying to change it midstream.
What if my plan changes? Am I completely married to if I start in a corp and my plan changes? Is there a way that, am I glued to that? And
that's a good question. So let's,
if the tax code is beneficial in another way, if I'm really living in a corp, but really should be living in an LLC neighborhood.
So let's talk about corps. You're asking really good questions, but I think we need to go through and talk through what exactly a corp is and how different it is from a limited liability.
Well, we talked about pass-through entities. We never talked about taxed entities, and that's what you're talking about.
Yes, so that's right. So a C corp is not a pass-through entity. It is its own legal entity, but it's also taxed as its own entity as well. So before we were talking about pass-throughs.
What does the C stand for?
Corporation.
C corp.
Yeah.
So corporation, corp. A corp.
But and we'll get into this, there is a designation of an S corp. And so that's how we kind of distinguish in the tax world, how we distinguish between an S and a C.
And the S stands for?
S election.
I think it refers to a code. Yeah. Sub-chapter S. Subchapter.
But we promise not to be.
We talked about
I remember that.
Yes.
Okay.
Yes.
Sorry.
So a C corp is its own taxable entity, and it has a very similar tax form structure as a partnership, as that Form 1065, but it's a Form 1120. And that 1120, if you were going to look at the two tax returns side by side, they're both almost the same amount of pages. They're both and pretty much set up and structured the same way, except for a C corp. You pay the tax at the C corp.
The C
level.
corp pays the tax.
Yes.
Yeah, the entity pays the tax.
Is responsible to pay the tax. Now, and so some of the questions that Jeff and I get all the time is, well, a C corp has such a lower tax rate than any other entity.
The individual rate.
Yeah.
For the pass-through income that you're reporting on your personal return.
Return, yeah. I want to be taxed at that 21% rate because a C corp's top bracket or top rate right now is 21%. But over on the individual side, there's marginal tax rates, and that top tax rate is 37%. Well, that's a huge difference. And so a lot of people will ask, hey, I want to be taxed at that lower rate. And that could be a really great a really great tax strategy.
But it has to fit your situation because there's other taxes that happen as well. So if you ever heard of the term double taxation, that was coined by the C Corp, and it's since 2018, it's much more favorable when the tax rates came down, but there's still other taxes that are out there, which is why you need a trusted team of professionals to walk you through that. Because if you just go, well, I see that 21 versus 37, well, you're not taking into consideration A, B, C, and D as well.
So that kind of goes into answering your question of, what's more favorable for me if I want to do a C Corp?
And can I change?
And can you change? Oh, Jeff, do you want to take that one?
Well, you can, but it could cause tax ramifications. So when you get into things like talking about liquidating a corporation or I'm
it
hesitant.
sounds like it's not just a yes or no.
It is not.
It is a strategy that you have to develop with your trusted advisor.
Right.
Okay.
And
okay.
I think one of the things that frustrates me in the 25 years that I've been working on the tax side is when you run into, I don't want to say other professionals, I'll just say other professionals that are always, S Corp's always the way to go, or partnership's always the way to go, or C Corp's always the way to go.
Be leery if someone says never or always.
Yes.
Okay.
Exactly. So what we do is we listen to what the prospective or current client wants to do, and we lay out the options and come to a decision together for what makes sense based upon the information we know and where we appear to be going.
Right. So I think, do we want to get into the nuances?
Or
do we want to?
Well, I do want to throw out one other tax that's out there, and we don't want to dig into it, but just the concept of self-employment tax.
Oh, this is a big one when clients, when clients come in, they get really, they don't, it's not a normal or common tax.
Yeah. So all the tax we've been talking about till now is what we would call your ordinary tax, which Sara mentioned the 21% in the corporate rate, and she also mentioned the marginal tax rates. That's the ordinary tax. The social, what we call SE or self-employment tax, really is Social Security tax. So when you are working as an employee, you know that 7.65% gets withheld from your check. So if I make $100, $7.65 is going to be withheld from my check to go to Social Security.
And Medicare.
And the employer is going to pay that same $7.65 as their share to go to Social Security and Medicare. So it's all together. Do the math. Anyway, I'm on a podcast. I can't remember it. Anyway, so when you step out and do this on your own, that's your entire responsibility. So now there's 15.3%.
Which is 7.65 times 7.65.
Thank you, Sara Mays. There's 15% there that you are responsible for. Whereas when you were an employee, you were really only responsible for the 7.65%. So there's that gets into a whole discussion about Social Security and thoughts on who's better to manage your money and reasonable compensation and all these kind of things, which is probably a whole other podcast. But that's another tax on top of ordinary that needs to be.
Surprises a lot of especially new entrepreneurs. They are very like, what is this extra? Because it is an extra line item on the tax return.
Yeah. So that's something that needs to be talked about. It's like a secondary tax, but Sara was talking about now if there's this what we call other considerations when it comes to entity structure. And we joked about it before as it's the suicide soda methodology of tax strategy. Sara, can you explain it in 2 minutes or less?
The S Corp, are we going to
just everything
where you could go?
Where you could go.
Everything.
Yeah.
Okay, so we talked about sole proprietor, and then if you feel like you need
which is 1040 and maybe a Schedule C.
That's
okay,
right.
Okay.
No structure.
I'm listening. I'm listening.
And so you've got your sole proprietor, and then if you think that you need that extra level of legal liability, then we suggest that limited liability company, the LLC. And then from there, then you can actually, as an LLC, be taxed. And if you have a partner, you can be taxed as a partnership, or you can make an election to be taxed as a subchapter S. A subchapter, that's the S election, so you can be an S Corp, or even as an LLC, you can make the election to be taxed as a C Corp. So,
Mind blown.
Yes. So you can legally...
So I can have an entity but be taxed as a
gamut of
different entities.
Yes.
Okay.
Yes.
Yeah. And you'll have to listen to future episode to learn how to manage all those, but it gets very complicated very quickly.
Yes.
But also it provides
sounds like a really complex family tree.
It is.
But it's also opportunistic.
It is very opportunistic. I mean, because it just gives so many, just a wide array of different types of ways to be structured. And it's not just looking at only tax. I mean, it is looking at legally, it is looking at how you are operating with your suppliers and your vendors, and also how you're operating with your partners. And
I think you just made an extremely great point that you can't let the tax ramifications, you can't let that tail be wagged by the dog.
Yep.
A lot of times you can, but a lot of times you could put yourself in a detrimental position. And that's why, again, the relationship is important and the trusted advisor is important, because you may end up paying more tax, but you have a specific strategic reason why you're doing that.
Aren't tax laws written for a reason? And is that what you guys do, is to maximize the laws and the codes so that you understand that it can be not a scary piece of business, but something that's entrepreneurial and be an opportunity where we can maximize the laws for my benefit?
Yes.
100.
Okay, I'm going to say it. You guys get so fired up talking about this. It's like, bring it. Bring the messy. Bring the complicated. Bring this crazy family tree, and we're going to sort it out, and we're going to go out and do something really cool.
And we haven't even started to draw yet on the whiteboard. So
yes, we love a good flow chart.
We love a great flow chart.
But one thing I want to say too is that, I mean, because I see clients that we get them into a structure and then they're always questioning, is this a good structure for me? Is this a good structure for me? Is this a good structure for me? And the answer is sometimes can be, yes, we do not need to change it every year or every 5 years or maybe ever. But I think it is good to keep asking the question. But at the same time, know that if you are surrounding yourself with a group of trusted advisors, that we do know what we're talking about.
Right.
At the end of the day.
The other thing too, to piggyback on that, is something that quite literally drives me nuts, is when sometimes when clients say things like, well, so-and-so at the country club tells me they don't pay any tax because they're a whatever, fill in the blank. We said this at the beginning, no situation, it's not cookie cutter. And so there's always issues and situations that cause differences for each individual business, for each individual business owner, for what they're trying to accomplish. And so, again, going back, if there's a legal or a tax professional going, well, S Corp always fills the role, that's just not the case. And so it's not a one-size-fits-all situation.
I think there's a selectivity of the trusted advisors with whom we surround ourselves, because someone can have the same credentials, but if they don't have the high level of expertise with a lot of diversity in clients and see the high level of complications, then their expertise may not be as expansive as what I see and what I hear in both of you. The more you know, the more you can use a high level of ideation to fill in the gaps or to see things that maybe other professionals wouldn't. Seeing opportunities.
Yep.
Seeing ways that we can maximize or minimize tax liability. And so much of that, I think, comes down to the high level of expertise and the way you guys are collaborating right here.
Yeah.
Is this normal? The way you might talk about one client?
Oh,
Is
yes.
this the way you would actually go in and brainstorm?
Absolutely.
Yes, because I mean, there's such an amazing insight when somebody is not in the weeds with you, and also just their professional experience that they may bring to the table. I mean, I don't know everything that's up in Jeff's head, and Jeff does not know everything that's up in mine. So I mean, what comes to mind most is what's coming out right now is like, I just think about all the international, I mean, and we haven't even talked international, but I promise I'll just bring it up just an example that.
We're going 740 down International Lane.
We're going down 740.
So isn't that an international form of some sort?
Well, I don't know all the international stuff. That's where Caitlin's stuff. That's where our trusted advisor internally, Caitlin Flynn, steps in. So I don't
saves the day for us.
Saves the day for us. So I mean, if I have a client that has some international activity or international exposure, I absolutely 100%. I do not pretend to know it all. And I will even tell my clients, I do not know it all, but please understand that I'm going to go find the answer for you. And I will dig as hard as I can to find it.
Absolutely.
And that's what, I mean, Jeff taught me that. I'm going to tell, I
don't know.
Taught me that from day one. From day one.
Well, and that's why we have Christy on the show with us, is because she can lead us down the paths and organize all those thoughts and say it so succinctly and wonderfully that helps convey the message that we're trying to convey.
I am a professional questioner.
Yeah. And summarizer.
Same. Yeah.
Well, I think we will wrap it up with that. We did our best to keep that at a high level and really just kind of share some insights and some theories, not strategies and concepts and recommendations, but just ideas. And our hope is that it resonates with the entrepreneurial business owners out there that are in the weeds of operating currently, as well as those that are starting out and need to ask the right questions. So, Sara, we're wrapping up here, and it's time for rapid fire. Now, this was a little weird because we don't really have someone new in the mic. Yeah. So we decided we would
back and forth. We would do you and me.
You and me.
Yes.
Okay.
Who's going first?
Are we gonna go five or six questions first, and then the other person?
I think we should you do a question, I do a question.
Okay.
How do you like that?
All right, let's go.
All right, I'm going to ask you a question first, okay?
All right.
Have you ever asked anyone for an autograph?
Yes.
Who? That's all one question.
Amy Grant.
Oh, okay.
All right.
What year? Just kidding. Just kidding.
Miley Cyrus or Hannah Montana?
Hannah Montana.
I get that. All right.
Yep. What is the best gift you've ever received? Deep.
That's deep. The best gift I've ever received is the spiritual heritage in my family.
Nice. Oof.
That is deep.
That is deep.
Oh,
wow.
Here I am asking you about Miley Cyrus.
Well, you took it down that way.
Yeah.
I'm like, I'm a transporter from.
All right. Favorite Rocky movie?
I don't know the number, but it's the one where he fights the Russian.
Number 4.
Okay.
All right.
I need to go. What's your favorite romance movie?
Okay, not that hard to answer.
Or romedy, romance and comedy.
The Proposal.
It's
good one.
Sandra Bullock and what's his name? Yeah, whenever it's on, we watch it.
Oh, good.
It's
It's a good one. Because it's on every night.
Yeah, right.
On a different channel.
If you could have lunch with one person, who would it be? And it can't be Jesus.
Ooh.
Or Hannah Montana.
Okay, I'm just going to do the first one that pops into my brain because that's what it was. And it was Adele. I just have followed her career ever since she was on Saturday Night Live, followed it. And I just think she's just a super interesting person.
All right.
Yep.
One more for
Okay.
you, one more for me.
What profession other than your own would you like to attempt?
Professional podcaster.
I knew it.
Hey, come on.
I knew it.
Actually, I mean, it would be
We're already doing
be
that,
some
so.
sort of. Right now, I think it'd be some sort of professional speaking gig.
Nice. Okay.
Yeah.
I like it.
Do you want to be famous?
No, I just want to act in my giftedness.
Wow.
All right, that's not saying I'm not gifted at tax strategy. I'm just saying. Yeah.
Right?
Okay, last one. Real deep here. Got 2. Lynx or patties when it comes to sausage?
Oh, patties all the way. That was easy. It was easy because Robert's a link dude.
All right. Well, we hope our listeners enjoy this insight into ourselves, and not only ourselves, but our guests as well.
Yes.
But again, we enjoyed geeking out on all this entity structure stuff as we rolled through this discussion.
And we only got one ply in. We've got many layers.
Five or six more episodes,
Yes.
but it could very easily bring up questions. And is there a way that people could get in touch with us,
Or
Sarah?
if Adele wants to contact you and talk
Adele.
about tax strategies.
Yes.
Yeah.
It would be podcast@cckcpa.com.
podcast@cckcpa.com. If you have any questions, and we are several episodes into this, and we have never really said this, but I'm going to say it because it's our podcast and our sponsor is CCK. If something we are saying resonates with you from a tax strategy, business planning, whatever, from a CPA perspective, let us know.
Yes.
We would love to help. We're doing this for prospective teammates, current teammates, but also prospective clients and current clients. So contact us at podcast@cckcpa.com if we can help, and we would love to help you. Again, thanks to all of our wonderful teammates. CCK Strategies, our primary sponsor. KP, thanks for doing your job today. Robert Mays for the ingoing and outgoing music. To our wise sage, Clarence Fisher with Tulsa Internet Marketing Services, and Natalie Renfro for getting us all organized and keeping us rolling. That's all for today. We hope that you join us next time when these two CPAs get together for a chat and you find out who's on the mic.
The information provided on this podcast is for general informational and educational purposes only and does not constitute accounting, tax, legal, or financial advice. While we strive to provide accurate and up-to-date information, laws and regulations change and individual circumstances vary. Always consult with a qualified CPA or professional advisor before making any financial or business decisions. The views expressed by the hosts and guests are their own and do not necessarily reflect the opinions of any organizations they are affiliated with. Listening to this podcast does not create a client-accountant relationship. By listening to this podcast, you acknowledge and agree to those terms. And that's a wrap for this episode of Two CPAs and the Mic. If you found today's episode helpful, please subscribe, share, and leave us a review. Have questions or ideas for a topic? Reach out. We'd love to hear from you. Email us at podcast@cckcpa.com.